Hello, thank you for joining another episode of our podcast hosted by GlobalStake, your leading bare metal staking service provider. We are excited because on today's episode, we have Markus Thielen, who is an incredible author who's written an amazing book that I can't wait for us to get into, The Crypto Titans. But Markus is head of research and strategy at Matrixport, which is based in Singapore. And earlier this year, he came out with this book, Crypto Titans, How Trillions Were Made and Billions Lost in the Cryptocurrency Markets. And this, I swear, is the best cryptocurrency book, I kid you not, that I have read, and I'm constantly telling other people to pick it up and read it. Because Markus, I'm just going to brag on you for a second. He is one of the few authors that I've read on the subject that is super neutral about the whole situation, the history of cryptocurrency. You don't have to worry about going into the book thinking that he is going to go down a tangent to steer you towards one way or the other. It is just, this is the facts. This is what happened. Take it or leave it. But here's some other quotes that people have said. Let's see, required reading for those looking to engage in the digital asset space, a truly amazing early history of a new era in finance, excellent macro and historical analysis of the crypto industry, et cetera, et cetera. You guys are getting the point, but excited to have you on, Markus. Ryan, we're excited, obviously, co-host him. So Markus, welcome. We really appreciate you.
Yeah, thanks, Ryan. Thanks, Ryan and Jordan, for having me.
Of course. So as always, we start with the very first question. I'm just curious for you to tell us about your background, like your story, what eventually led you into cryptocurrency.
Yeah, thanks very much. I mean, I've been in Asia for the last kind of like 15, 16, 17 years. Worked for large banks, initially in proprietary trading, moved to a large hedge fund called Millennium Capital Partners, one of the largest hedge funds out there. Afterwards, I launched my own hedge fund, more on the macro space. Was always focused on kind of market cycles, liquidity, and a very trading focused background. And afterwards, I moved to a crypto firm where I was a chief investment officer, overseeing 7 different crypto funds. We did everything from arbitrage to long short strategies, and then basically I came to Matrixport, which is a $4 billion crypto investment platform. It's started by a gentleman called Jihan Wu, who's one of the largest Bitcoin mining machine manufacturers. They have a market share of 80% at Bitmain. It's its history, so very well established in Asia. And I write research quite frequently, published on LinkedIn or Twitter, and very active really in pumping out some fact-based research.
So then, out of curiosity, most traditional finance hedge fund people that we talk to take a long time to finally even experiment with crypto, let alone invest in it. So what was the catalyst for you that early on you thought, hey, I'm leaving traditional finance and kind of exploring this?
Yeah, I think there are a few components, right? One, I wanted to do something a little bit more tech focused, but also I was managing a portfolio and I had a 10% allocation on an institutional portfolio where I have a 10% allocation in crypto. So it was suddenly part of it, and it became bigger, and it was just a little bit more exciting. And my approach is a little bit less on the tech heavy side, rather more on really the liquidity side. Of course, I've done really well this year with the macro calls and everything. And I think actually, and this was a little bit the analysis I really went through, that the Bitcoin is very often driven by these kind of macro cycles more than anything else, right? Of course, we're attaching a little story around it, right? Be it DeFi summer. But at the end of the day, DeFi summer is sort of like a child coming out of 0 interest rates for 10 years, and suddenly, it suddenly worked, right? And then people attaching narratives around it. But I think you can make an argument that it's very often a policy decision that opens the door, and suddenly it explodes. And I remember, I think it was in January 2013. The guy next to me at where I worked, he bought Bitcoin on Mt. Gox. It took a week to get the confirmation, which is a horrible process. And in 2015, we tried to set up some cross-exchange arbitrage system, but it didn't really work. And it was cumbersome because USDT wasn't really that used, so you needed to have some capital there and another exchange. So it all kind of the market wasn't really there. But I think the long story is this: once the market cap was more than $1 trillion, the large institutions couldn't really ignore Bitcoin anymore. And this is really the difference why we're having all these institutions now in the market, because they look at it, if it's like a $50 billion market, I mean, who kind of cares, right? It's like nothing compared to, the large financial markets out there. But $1 trillion, I mean, we should better have some analysts looking at this stuff. And I think that's what all the banks, the BlackRock of the world are saying to themselves. And I think this is why the institutions are not leaving and have not left during the, the crypto winter that we had like last year.
Makes perfect sense. So then to transition here, curious. So then, what led you to write the book? Just with your background and all the balls you've been juggling, and the titles and the roles, what made you want to sit down and write an actual thesis?
Yeah, the idea was really to understand how everything in crypto is really connected and how everything really interchangeably works, right? I mean, we talk about stable coins all day long, basically, but stable coins are only used basically since early 2020. I mean, this is only really like 3 years ago that people really started heavily using them, right? And what was the trigger? What was the main event that it became so popular? Of course, you look at, for example, Tether's market cap. I mean, 2018, yes, it existed, but it wasn't really anything meaningful, right? So, but what was the event that suddenly people started to use it? What was the event that Binance became so big, right? Or, of course, we know about some of the hacks that brought Mt. Gox down, but how does it all kind of really fit together? And I think the most surprising factor is really that some of these characters that have started certain crypto projects, I mean, they have started, many other projects as well, right? And for example, how one, kind of like a Chinese exchange student, you can call him, started an exchange in Singapore, and out of this exchange over like a few iterations, you suddenly, I would argue, Tether came out of it, right? And of course, Tether has like many fathers, as any success story has, but it's kind of interesting how everything actually is connected in crypto. And I would argue also that maybe like 100 people really control the whole market. I mean, of course, we all want to be involved, but I think the market is very concentrated, and it's quite interesting how this all works. And that's what I was trying to figure out with this book. And it was just like one door led me to another, and it just it didn't stop because crypto doesn't stop, right? You cannot uncover like so many things, and I think that's quite interesting.
I haven't had the chance to read the book yet, Markus, but one of the things that you were just commenting on is just this concentration of, say, 100 people who do control the markets. Do you feel that this control is going to be further distributed as we move into the future? Like, a lot of dynamics are shifting right now. We're now in a very high interest rate environment, for instance, and Bitcoin throughout its entire history has lived in this very low interest rate environment. Do you think some of these macroeconomic factors and just, greater regulatory clarity and other things that are coming, are going to change that dynamic of 100 people, and it'll be more distributed in terms of the power?
I mean, maybe if the market becomes bigger, I don't think it has to do with really interest rates. It's more really that, when you simply look at how many Bitcoins have been mined over time, right? And I think by 2012 or 2013, like 50% of all the Bitcoins have been mined already. So of course, the people who mined it, and if they were still holding onto them, of course, they control the whole market, right? And you can also argue that right now, Bitcoin's dominance is 53%. So despite these 20 or 30,000 other coins and tokens that are out there, they're still not challenging, the main token, right? And you can even like argue that, Ethereum has a really great story going for itself, but Ethereum's, revenues are so low this year, right? Nobody's using any DeFi, nobody's using any NFT minting. So Ethereum is not there where I think a lot of people projected it to be looking back like a year or two, right? So it's all Bitcoin. And I think Bitcoin, we can make an argument from more like a macro story. Is it kind of like an inflation hedge, or is it a alternative store of value, or is it like some safety pocket in the times of war, or is it another way to store your money because there are all these fiscal deficits and this endless spending, right? So but nevertheless, I think there are all these like interesting stories around it, and each bull market had a different narrative. And I think when you look how some of the people have really kind of sort of cornered the market, they were early and then they were really big, right? I mean, they're like different characters, but of course, nobody came out of nowhere really, right? Usually people had some money already, so they could buy, 10, 20,000 Bitcoins, early on. And of course, that's a huge amount of money now, right?
So let's transition into the actual structure of the book. So for those of you that are listening that haven't read the book yet, essentially what Markus breaks down is the 4 crypto bull markets. So he talks about 11, 13, 17, and 21. Then after the 21, talks about the bear of 2022, and then ends the book with an explosive fashion of FTX. So to kind of just prime us, for the average person that's maybe listening to this or watching this, that's a traditional asset manager or hedge fund in the TradFi space and is looking into crypto, can you give us kind of the highlights of each one? So you mentioned there's typically a cast of characters through each bull market. Kind of give us a high-level overview of the history.
Yeah, the idea was really to provide a weekend narrative to understand really how the industry started, evolved, what was kind of the main themes of these different bull markets. Of course, people kind of know, Bitcoin came from sort of 0 to suddenly above 30,000 again, and at peak it was a bit more about 60,000. But people don't really know what were the drivers, right? Of course, people have heard of bits and pieces here and there on Mt. Gox, of course, and some other things, and BitMEX maybe. But of course, how does this all kind of is connected, and what is really the motivation that people suddenly kind of come to the market? And what I initially set out was really to understand these 4 crypto bull markets, and one was 2011, which was driven by Bitcoin is a new payments mechanism. 2013, which was driven, on the one side by the European debt crisis, the bail-in of Cyprus, the depositors, but also at the same time, and this is when the bull market really gained traction, in China. So the Chinese discovered Bitcoin. The state TV, CCTV, had a documentary, 25 minutes, saying this is a new form of money. It helps to evade taxes. They really said this, and of course in China, you cannot just send the money outside of China, right? You have limited investment restrictions. Bitcoin really went up 5,000% in 2013. It was mainly driven by the Chinese, and by the end of 2013, 90% of all the Bitcoin trading was happening in China. Right? You just have to really imagine this, right? So the amount of the Bitcoin software in 2013 in the US was downloaded, it doubled. In China, it went up 7x. So it's just a massive ramp up. And this combined also that in China, they discovered how to mine the Bitcoin a lot more efficiently and a lot more powerful. So suddenly, all the Bitcoins that were mined in China, because they suddenly had the most powerful machines. They set these machines at the kind of 1 to 3 months investment recuperation rate. So, you invest $1,000 now, and in 3 months, you have your money back. But of course, the Bitcoin price rallied so massively that some people made the money back in 3 days, right? So you can just imagine the fortune that were made. Before you had some smart tech guys in New Jersey, plugging 2 computers together, and the Chinese looked at this hey, if it works with 2, why don't we have 10,000 computers, right? And they built these huge mining farms, cheap electricity, and it's very interesting how this whole industry really evolved, right? And then fast forward, the 2017 was of course the ICO bull market, how to raise capital more efficiently. People put huge amount of money in there, and of course a lot of people remember this, but they don't remember the amount of money that was raised. I mean, really billions after billions after billions. And most of these ICOs went underwater within 4 months after the ICO. So I think 70% lost money very quickly. A lot of people sold out. A lot of people kind of, disappeared with a lot of the money there. And then, of course, the last bull market was the 2021 bull market. And it was driven, of course, 2 phases here. And this is interesting because the one was driven by the yield farming craze, which was kind of the, came out of the low interest rates environment, but also we had, of course, the NFT craze, right? So 2021 or 21, we had the peak first in April based on DeFi summer, but then the whole DeFi protocol coins started to lose value. So they went lower and lower. While Bitcoin made a new high then in kind of September, October period. And this was, of course, coinciding with the NFT craze. And of course, there are some interesting stories around there as well. I think that's kind of like, in a nutshell, those 4 bull markets.
I just got to jump in and say this, that the 2013 aspect especially was really revealing to me. I did not know any of that history about China. I'm so looking forward to reading your book. I'm glad I got the Kindle edition because I can start today. But one of my students, one of the smartest students when I was still teaching in school, he actually was sent as part of the State Department in the US to China in 2012 and 2013. And he came back that spring, and the first thing he said, have you ever heard of Bitcoin? And I said, no, what's that? He said, everybody in China is talking about it. It's a new form of money on the internet. So I look it up. I see everything about Silk Road, all these crazy bad stories. And I'm like, I don't want to touch this thing. And I could see the volatility and the price whipping all over the place. But I had no idea that there was this big sort of populist push in China. So that was really interesting. Thank you for sharing the story. I'm really looking forward to the book now.
Yeah, thank you. There's also an interesting story because that was the time also of over invoicing exports from China into Hong Kong, right? So Hong Kong was reporting something like they imported $200 billion worth of goods from China, but China was claiming they sent $280 billion. So where is these 80 billion kind of disappearing between the border suddenly, right? And of course, some probably went into Bitcoin. With Bitcoin, you can mine it in China. So of course, you buy the machines with the Chinese currency. You buy electricity with the Chinese currency, but then you can sell the Bitcoin for US dollars overseas, right? And I think that's kind of like how this whole thing, exploded. Stable coins started to trade at a premium. What a lot of people also don't know right now that, yes, the market cap of Tether is around like 84 billion US dollars. And of course, the Tethers started to be issued on Ethereum, but now the largest chain really is actually on Tron, right? Tron has overtaken the issuance of Tethers, of Tethers on Ethereum. So, and of course, Tron is more Chinese focused and Chinese linked, and you can understand maybe there is something going on that we should investigate further, right? But I think that's kind of like the interesting aspect, how it's all kind of, because in the end, it's like a global currency, I would argue, right? Or a global commodity. And one thing that I particularly found interesting is, I was in Hong Kong, for the last, decade or two. So crypto was around there, very early on. But what I didn't really hear was these big siren calls from the central bank or from the regulator, and that had such a profound impact, right? I mean, of course, we look every day, let's say we're looking at the stock market and we're hearing all this noise, but we don't see the bigger picture, right? The bigger picture is if the central bank suddenly changes interest rate policy. And in Hong Kong, in 2014, basically, China was starting then to say this is all crazy. They were outlawing Bitcoin more or less, or crypto. The PBOC, the China central bank, basically told banks not to engage with crypto firms anymore. So they did a different CCTV documentary saying, oh, crypto is all bad suddenly, so that is like within a year that has changed completely, and it's quite interesting. But then 2014, the Hong Kong central bank, the HKMA, suddenly came out, well, to us, Bitcoin is a commodity. So basically, if you have a vending machine and you're selling Snickers, well, it's a commodity. You don't need any money transmitter licenses or something. And of course, that's when the whole industry moved from China to Hong Kong, and it just literally exploded because the regulator said, well, it's a commodity, so guys have fun with it, right? And these Bitcoin ATMs, you had like shops where basically you could walk in literally with plastic bags full of money and convert the money into crypto. And of course, then, kind of like washed it. And apparently people were coming from all the different countries in Asia with, not plastic bags, but you get the point, right? Backpacks full of money. And of course, one of those companies that was set up like this, and they claimed in a different podcast, that they have like 60 good relationships across Asia, even in Cambodia, where they can collect money and so on. But this was one of the closest affiliated companies to FTX or to Alameda. So you can just like wonder how this all kind of worked together. And I mean, it's just really fascinating how closely interlinked the industry is, and this is what I think reveals it a little bit in the book as well.
So then to stay on the China thread, I'm curious. So we just ended on the 2021 bull market. Your book goes on to talk about the 2022 bear market and then FTX. But just separately, I'm curious, do you believe in the 4-year cycle? First question there. And then second question would be, you've alluded to China in the past has been pro, against, or constantly flip-flopping. Do you think with some of the recent developments in Hong Kong that China is going to help spearhead the next bull market?
I think the steps that have been taken in particularly in Hong Kong are quite timid, if that is the right word here. I think when you look historically, they were a lot more open, a lot more laissez-faire, and had, of course, a very different impact on the crypto industry. I think the lesson is really, if there's a jurisdiction where you have the talent, where you have the money, the right infrastructure, crypto can really explode. And of course, the Middle East tries to be the hub right now. I think they struggle a little bit with the infrastructure, to attract really, the number of people. It's not just about, offering low tax and capital. People want to have the right environment with a lot of universities, a lot of young people. I think London made a really good step in that direction. A lot of young people, a lot of universities there. But of course, you need some other pockets there as well. But I think with crypto, it has really flown from one direction to another, depending on the kind of the political or global economic setting, really, right? And I don't see this right now. That's why we sort of in a little bit in a no man's land. But when I, for example, analyze where's really all the flows coming from right now, and people like to quote that there's so many people in Asia trading crypto, but they're trading really small bits and pieces, right? That versus if you have an institutional player in the US, regulation can be bad or restrictive. Nevertheless, I think the pools of capital are a lot larger, and that's why I think you're seeing this bull market that appears to be happening right now, happening in the US based on the money flows around potential BlackRock ETF or other ETFs. But
Ryan, I don't mean to jump in again, but he brought up the ETFs. Now I just want to pick your brain on this, Markus. So you mentioned in 2017, the bull market hit $1 trillion, and that's when institutions basically couldn't ignore it anymore. The last bull market got up to above 3 trillion. Right now we're sitting at just above 1 trillion. But during the last 5 years, per se, since then, up through this year, really, we're starting to talk about ETFs, Bitcoin ETFs. Maybe we can get an Ethereum ETF approved. The root of my question here is really if you can break down for the average person why once a Bitcoin ETF is approved, it's not going to cause this insane break. And what I mean by this, I've heard a lot of people in the space talk about the second a Bitcoin ETF's approved, Bitcoin dominance is going to shoot up to 95%. There's going to be, $3 trillion flooding into just Bitcoin. It's just going to be insane. Altcoins aren't going to matter anymore. But you recently wrote in your DeFi on Target newsletter where you're talking about, all right, let's calmly explain what would happen if a Bitcoin ETF was approved. Where would the dollars flow? Can you kind of expand upon that whole situation?
Yeah, I mean, let's just break it down where the money really could come from. So number one, in the US, you have a lot of institutional players using ETFs for asset allocation decisions. So they are the so-called registered investment advisors. There are 15,000 of them, and collectively they manage something around $5 trillion US. So they base a lot of their decisions when they talk to their clients about should we have 50% equity exposure or 55, some bonds and so on, right? Not everybody sits there and trades the latest, meme coins or meme stocks and so on, right? So it's really kind of those investment allocators that making high-level decisions and really as an asset allocation approach. And again, they manage 5 trillion. So let's say they would put 1% of those 5 trillion in a Bitcoin ETF for diversification, you get to 50 billion. So you have 50 billion of inflow on that side. You can also look at, for example, precious metals ETFs. Let's say the gold GLD, it's around 56 billion. Then there's some other gold ETFs, some silver ETFs. You get around to like 100 to 120 billion. And you say, people these days, they don't look at gold maybe as an old concept. Bitcoin is a similar approach. Some going to be 100% move out of gold into Bitcoin, but maybe let's say 10% or maybe 20%, right? So that's when you get to kind of 12 billion to 24 billion. So you can argue then, let's say we take a little bit like the 24 billion number on the low side. On the high side, you're getting to 50 billion just based on 1% asset allocation out of these registered investment advisors, 5 trillion that they collectively manage, right? And a lot of hedge funds are using ETFs, just get me some exposure into banks, get me some exposure into tech stocks. They don't buy the tech stocks per se, right? They don't want to take a view on Microsoft or Google. They just say, I'm bullish on the sector because I'm bullish on the economy or whatever the narrative is. And I think this is suddenly how Bitcoin can be used as an ETF. Right now, we know, of course, some forward-looking, let's say, university endowment funds, pension funds, they have some venture capital portfolio, they have some private equity exposure. They cannot hold tokens themselves, so that's why they went down the route of having VC exposure, buying, for example, a stake in FTX or in other crypto firms, right? But with an ETF, they can do this, right? And the other aspect is people suddenly can also borrow money against this ETF, right? It's seen as like a proper security. And I think that's why it's like a big deal, because in the US, you don't necessarily have the retail investors dominating the market, the stock market. You have these institutions, and these institutions, they're a big buyers of ETFs. And I think that's why the ETF is actually a big game changer. And the other analysis I did was, for example, when we look over the last, let's say, 1 or 2 years, if the market cap of Tether as a benchmark of money inflow through the minting process, if the market capitalization of Tether changes by, let's say, 10 billion, what was the impact on Bitcoin? So, and of course, if we suddenly have like a market cap increase of like 24 to 50 billion, of course, not in Tethers, but let's say another player, let's say BlackRock as an example, so it might have a similar impact, and that's why you can project it a little bit. The price impact that 24 or 50 billion US dollars of net inflow might have on the industry.
Markus, really appreciate it. Well thought out answers all around. For the sake of time today, want to remind everybody, Crypto Titans is his book. It is linked below. You can get it on Amazon as well as on Kindle, which obviously with Amazon. Please definitely reach out to Markus on LinkedIn. Subscribe to his newsletter, DeFi on Target. His well-written newsletters are something that gives you bite-sized chunks on everything that's happening in the market nowadays that are easy for you to digest. But really appreciate having you on today. Thank you so much.
Thanks for having me.
Second what Jordan said. I'm really looking forward to reading the book. This was a very insightful conversation. I learned a lot, Markus, and thank you so much. Really appreciate it.
Yeah, thanks, Ryan and Jordan.
Thank you all. Please, again, reach out to Markus if you have any questions.
Take care.